Bismillahirrahmanirrahim. I would like to welcome all the participants and we will start our session in next 2 minutes. Actually, we are connecting our webinar with our Facebook and Facebook pages and with Facebook group so that other participants may also join us. Thank you. Thank you very much for the patient. Uh, Before to start, may I know Mr. Belai is with us in this meeting? The Mr. Belai, the Director of Insurance in NBE. Mr. Abu Bakr Abdullah. Mr. Belai, can you unmute yourself? Okay. I hope so. He will join us shortly. Mr. Belai, can you unmute yourself, please?
Okay, can you hear me now?
Yes, no, we are hearing you. I'm making you the co-host of this event as well.
Sorry?
Yes, you are the co-host of this event. You know we are listening you. Thank you very much for your time.
Okay, thank you.
Thank you very much.
Okay,
If you allow
welcome.
me, may I start today's discussion? And
Yes, we can proceed.
okay, thank you very much. Nabadu Nasalli la Rasulil Kareem. Amma baad, Fauz billah imni shaitan rajim. Bismillah ar-Rahman ar-Rahim. On behalf of AlHuda, Center for Islamic Banking and Economics, I would like to welcome all the participants in this short webinar about the development of the Takaful industry in Ethiopia. The purpose of this webinar to give a brief introduction about the Takaful, that what is the Takaful and what is the potential of the Takaful for the financial inclusion in Ethiopia. As you know very well, in Ethiopia, you already have very good components of interest-free financial industry. I mean, you have a couple of Islamic interest-free banks. You already have one full-fledged interest-free bank. You have a couple of interest-free microfinance institutions and other components. And I'm very much optimistic that a value addition in Islamic finance industry by having a takaful in Ethiopia, it will increase the financial inclusion and also give a supplement to the interest-free and banking industry. So without any delay, I would like to invite our guest of honor, Mr. Pillai Talod, who is the Director of Insurance Supervision at National Bank of Ethiopia, to have being the chief guest, to have some words and share his journey to initiate the CAFU in the country, because he is the person, he is the main person behind who introduced this concept in this country. And I'm very much optimistic that his name will be in the history for the development of the Takaful in Ethiopia. And I'm very much sure the concept of a Takaful will not limited with Ethiopian market. It will separate to other East African countries as well. So, Excellency, Mr. Bilai, no floor is yours. You are requested, being our chief guest of today's webinar, you have to inaugurate your this webinar and share your journey. Thank you very much, my brother.
Okay, thank you, Mr. Zubair. And good afternoon, my colleagues and friends from Ethiopia and the participants from other places. In fact, it is an honor and a pleasure for me to co-host or to be a guest of the meeting, because it resonates very well with my official duty, which is expanding and growing the Ethiopian insurance market, and particularly including those people who are marginalized somehow, or the people who have not so far been participating in the financial sector, particularly in the insurance sector. Having said that, in the first place, I want to thank AlHuda Institute for Islamic Finance for being our trusted partner in developing or introducing Takaful insurance and other Islamic financial products in our market, and for being our partner in the development and design of our relevant regulatory framework in this regard. In fact, we have worked with them for a while, and still we are hoping to work more in the future, because now banks are coming, and so far I can say most of the commercial banks have been working on window basis now, that we have now launched the first full-fledged Islamic banking, and others are in the pipeline. Therefore, at least for the initial period, we need to have insurance companies who will support or who will complement the interest-free banking service with a corresponding Takaful insurance. So apart from supporting the interest-free banking, we hope and anticipate Takaful insurance will be a tool, a commercial service that will improve the lives of insured people, and will also help us to further deepen the insurance sector and increase the volume of our insurance business, and as well as the insurance penetration. So from this perspective, we welcome very well, openly, any initiative that will help our insurance companies to be competitive, to provide choice of a range of products. Therefore, our today discussion would be one step further ahead in this journey that will embrace those companies who have not yet taken this issue seriously, to consider Takaful business as one of additional market segment, and to prepare themselves to grab any opportunity that comes from the banking side and from the population at large. So with this, I would like to inform you, or I would like to declare that the meeting has been opened. Thank you.
Thank you very much, Mr. Bilal Talu, the Director Insurance at National Bank of Ethiopia, for opening today's session. And thank you very much to give us insight about the development of the cat food industry in Ethiopia. And we are very much optimistic that under your kind leadership, industry will be flourish very fastly, because there is a huge demand for the cat food product in the country. So without any delay and with your permission, let we proceed with the presentation. And as mentioned, that today we will discuss about the operational aspect of the cat food, and as well as we will discuss about the different components of Takaful, the development of the Takaful industry in Ethiopia, and what are the opportunities and what are the challenges, and what would be the way forward. So let's start with the presentation. Uh, Let me start with some basics, that what is Takaful. Basically, Takaful is a Sharia compliant brand name for Islamic alternative to conventional insurance. It's based on the principle of Tawan, which means mutual assistance. And when we talk about Takaful, basically, before go to the detail, let me discuss one thing, that what is the difference between conventional insurance and Islamic insurance? Basically, in Islam, we do not have any contradiction with insurance or insurance concept or insurance philosophy. In even in Holy Book of Muslim, in Quran and Pak and in Sunnah, there are many references which supposed to insurance. By the what insurance does to help the people at a time of hardship, to provide the facility to the people at a time of hardship. If there is flood, if there is heavy rain, if there is earthquake, if there is accident, insurance have to facilitate. And basically, this is the purpose of Islamic teaching as well. So in Islam, basically, we do not have a contradiction with the insurance concept or insurance philosophy. Islam supports that concept. Once the Holy Prophet Hazrat Muhammad sallallahu alaihi wasallam was traveling with a companion with the Sahaba, and they stopped somewhere for ablution, and the companions of Prophet they didn't tie their camel and run away for prayer. Hazrat Muhammad sallallahu alaihi wasallam stopped them and asked them, "Why you didn't tie your camels?" They said, "We have trust to God." Then Prophet replied that first you have to tie your camels and then put your trust to God or Allah. So what is the message from this teaching? And similarly, there are uh, a lot of other references which are available even in Quran, which directly support to the concept of insurance. But then where is the contradiction? Why Sharia scholar says that insurance is not permissible? Basically, there is some un-Islamic element. There is some un-Islamic elements in the operations of the insurance companies. Therefore, Sharia scholar says that insurance is not permissible in Islam. So if we remove those un-Islamic elements from the operations of the insurance companies, that is called Takaful. So briefly, I have to repeat that Islam do not have a contradiction with insurance. In Islam, we have the practice, we have philosophy, and we have a concept. Where is the contradiction? When there is some un-Islamic element in the operations of the insurance companies, which is not recognized by Sharia or Islam. So this is the brief that what is takaful and what is the conventional insurance, to just remove un-Islamic element from the operations of the insurance company, that is called takaful. Uh, Takaful comes from the Arabic root words kafala, which means mutual guarantee. What are the un-Islamic elements in the operations of the insurance company? Those are the four un-Islamic elements. As I mentioned you before, Islam always supports the concept of insurance. Where is the contradiction? In the operations. What is the contradiction? These are the four contradictions according to Sharia. Number one, in conventional insurance, they have interest, they have riba. The second, in conventional insurance contract, they have gharar. Number three, in the conventional insurance contract, they have qimar, gambling. And number four, last but not least, in conventional insurance operations, they have the risk transfer issues. So these are the four un-Islamic elements in the operations of the conventional insurance company, which is not recognized by Sharia. And to remove these four un-Islamic elements, that is called takaful. So let me explain how interest is in conventional insurance. Number one, that when conventional insurance company take the premium from their clients, they put that premium in interest-based banking, and then they take the interest from there. Number two, gharar. Basically, Islam says that the contract between insured and insurer, they have uncertainty, that they have gharar. And Islam says that whenever you have a business contract, they should not have any uncertainty. Basically, Islam categorized the contract into two major categories. Number one, the contract of sale and contract of non-sale, akute mabda and akute ghair mabda. What are the contract of sale? Whatever contract we have for buying and selling, those contracts are the contracts of sale. And what are the contract of sale, non-sale? In Islam, like nikah, the marriage contract in Islam, that is called nikah. That is the contract, but that is the contract of non-sale. And then similarly, the tabarruk, the donation contract, that is again a contract, but that is a contract of non-sale. Islam says in the insurance contract, the policy, they have an uncertainty. For example, I am the insurance company. I am the insurance company and you are my client, and I give you this policy. Islam says that this is the contract between the company and the client. But they have in this contract, they have uncertainty. You give me $100, I give you this policy and insure your car. You are uncertain that what is your benefit. Might be you have a total loss. Might be you have a partial loss. Might be you do not have any loss. So Islam says that in this contract, I'm the insurance company, I am uncertain as well. I do not know that what is my benefit in this policy. Might be I will earn $100, might be $50, might be I will give you 10,000 claim. So Islam says in this contract you have a gharar, you have uncertainty. And Islam says gharar is not permissible when it's come to the business contract, and that insurance contract is the business contract. So this is a second objection in conventional insurance. The third objection is kimar. Kimar is in your local Ethiopian language as well. Kimar means gambling. Islam says in the insurance contract you have a gambling. Basically, kimar is a specific gambling where is the benefit of one person is dependent on the loss of the other person, or a loss of one person dependent on the benefit of the other person. That type of the relation is called kimar. Islam says that in insurance contract you have kimar. You give me $100 and I am the insurance company. If I am giving you the claim, it means your gain is dependent on my loss. Or if I am not giving you any claim, it means your loss is dependent on my gain. So this type of relationship called kimar. Islam says kimar is not permissible in Islam. So this is the third objection in the operations, not in the concept. If Islam have any issue with the concept of the insurance, then there might be no Takaful company or no Islamic insurance company. Islam do not have any issue with the concept or attribute of the insurance. Where Islam have an issue? In the operational mechanism. Anyhow, the fourth and the last objection in insurance by the Sharia scholars is that risk transfer. In Islam, Islam says always to bear your risk yourselves. That whenever you have any business, any activity, every person have to bear their risk themselves. But in the insurance mechanism, for example, when, as per the previous example, when you give me $100, it's mean you transferring your risk to me. Islam says that transforming of the risk is not permissible. Islam says you have to share the risk, but you cannot transfer the risk. So basically, these are the four un-Islamic elements in the operations of the insurance companies, which is not recognized by the Sharia scholars. Therefore, Sharia scholar says that insurance is not permissible in Islam. And if we remove these un-Islamic elements from the operations of the insurance companies, that is called takaful. So in the later slide, I will explain you that how these are Islamic elements are eliminated from the insurance operations, and that is the careful. And by the way, this is a very big misconception that the takaful is very difficult to operate. No, the takaful is very easy to operate. When you have to start takaful, and whenever you have to utilize the takaful concept, you will understand then even takaful concept as much easier than to the conventional insurance. But the purpose of the both things to provide the insurance facilities to their clients. And I would like to congratulate to National Bank of Ethiopia that they have designed our idea directives to initiate the takaful industry in Ethiopian market. I used to be work in Tanzanian, Kenyan, Nigerian, and many African markets for takaful, and sometimes have a very good engagement with the regulators as well. But Alhamdulillah, and I would like to congratulate to Mr. Belay as well that they introduced the CAFU directive in a such way that every insurance company can have a window operation to facilitate interest-free banking and finance industry in the country, to facilitate the insurance inclusion, and in the broader aspects to facilitate the Ethiopian economy by having a very new product in the market. And I also would like to rectify one misconception that the kafir is only for a specific religion or segment of the society. No, the kafir is a system which can be utilized or operated by Muslims and non-Muslim brothers and sisters. But for Muslims, yes, that is according to their religious beliefs. But for non-Muslim brothers and sisters, that is a very good concept for the insurance. So you will see that when the kafir will be in your countries, that it will be equally utilized by our segment of the society. And that would be my humble request to the insurance practitioners as well. Then whenever they have to design the marketing campaigns and penetration strategy to introduce the takaful, they have to introduce the takaful in a such way that it should be solution for all. By the way, takaful is a system. Takaful is not a religion. Takaful is a system which can be utilized or operated by any segment of the society. For example, I have a Samsung phone. And in Samsung phone, I'm utilizing Android system. And that Android system is made by non-Muslim. And in a day, at least 300 times I have to utilize this Android system. But I'm the Muslim, but that system is made by non-Muslim. But being the utilizer of that Android system, either that affect to my region? No. I'm the utilizer of the system. So similarly, if any non-Muslim brother or sister may utilize interest-free banking or Takaful, they are utilizing a system of insurance and banking. And I'm very much happy that in Ethiopia, the acceptability of interest-free banking product and inshallah for the Takaful product are very common for all. So I just wanted to rectify one misconception that either the Takaful is only for Muslim. No, the Takaful is for all. And you will see that the Takaful will increase the financial inclusion in the country. So these are the, as I mentioned, that what is the wrong with the insurance practice? We can categorize that these are the four un-Islamic element in the operations. If we remove these four un-Islamic element, that is the takaful. So how a takaful company removed these un-Islamic element? Basically, they have to eliminate that non-Islamic elements from the operations. For example, number one, the interest. And according to the directive of NBE, all the investments should be made or all the deposits should be made in interest-free banking industry. So it means there is no interest. In the CAFU, they have to utilize the contract of non-sale, that is called tabaro, instead of contract of sale. It means there is no gharar. For gambling in Takaful, they utilize a model in a such way that the benefit of the company is not dependent on the benefit or loss of the client. In the model, when we will go to the model, I will explain that in a Takaful, the insurance company have to pay the claim from participant pool, that is called PTF, Participant Takaful Fund. So the relationship of the loss or gain of one person dependent on the loss or the gain of other person, such type of gambling relation is not at the careful. The fourth risk transfer, basically the careful is a mechanism of a risk sharing mechanism, not a risk transfer. So while explaining these four things, let me share you the model and then I will come back to you for the slides. Let me share the model with you first. For example, here are the participants who give the contribution. This contribution goes to a common pool. Okay. When that goes to the common pool, then the company have to invest that pool in Sharia compliant mode. And when they have to invest that pool in a Sharia compliant mode, what is the profit that come back to that pool? It's mean that is the investment is made in interest-free banking. And then from that common pool, a wakala fee, a agency commission is taken to the insurance company to manage the claims and to manage other things for those services. So whatever is the remaining after wakala fee, claim and itakafu, whatever is remaining, that is called surplus. And from the surplus, The Takaful company takes some contingency reserve for the future claims, then some charity, and whatever is the remaining that again distributed to the participants on pro rata basis. So that is the mechanism. Let me explain that mechanism to you again. Then I will go to the technical model so that you can understand. And I'm very much optimistic that after having the model, you will have a very good questions as well. These are the participants. Participants give their contributions in a pool. Participants mean the clients. They have to invest in interest-free banking. What is the profit came to this pool? Come back to this pool. From that pool, the pool of the participants, the Kafur company take the wakala fee, a commission to perform some task, and then all the claim deducted from that pool, and all the re-takaful costs. Re-takaful means Islamic reinsurance deducted from there, and whatever is the remaining after deduction of this cost, that is the surplus. And after taking some reserve for the future, whatever is the remaining at the end of the year, that again distribute to the client of the Takaful company. Basically, this is a very good attribute that whatever is the remaining at the end of the year, that again distribute to the participant. And if we see the global development of Takaful industry in different countries, this is the very big motivation for the people. For example, in Malaysia, the total Muslim population is 56%, and remaining are 39 or 40% are Chinese who are non-Muslim. But Chinese are dominated into the business in Malaysia. But Chinese always prefer for takaful. Even they are non-Muslim. Why they prefer to takaful? Because they know that whatever is the remaining at the end of the year, that again distribute to us. Right now, about 500 takaful companies are working in more than 65 countries. About 20 to 25 takaful companies are providing reinsurance services. And similarly, we can see right now there are takaful companies in Asia, in Europe, in America. Even in Australia, there is a limited takaful coverages. And in Africa, yes, Africa is emerging. More than 100 takaful companies are working in Africa. And by the way, you will be happy to know that first takaful company was established in Africa, in Sudan, in 1979. So we can say that Africa is the continent who introduced the takaful concept in all over the world. And if you see in Africa, you can see a takaful company in every corner of Africa. For example, in East Africa, there is a takaful company right now in Ethiopia. There is a takaful company in Kenya. There is a takaful company in Somalia and Somaliland. There is a limited takaful operation even in Mauritius. In West Africa, there is a very good takaful companies in Nigeria, in Senegal, in Burkina Faso, in Mauritania. In North Africa, a very good takaful companies in Tunisia, Algeria, Morocco, In Misr and Sudan, they have dozens of Takaful companies and Takaful companies. Even in South Africa, they have a Takaful company. So Africa is emerging for the Takaful industry. And this is the ideal time for the Ethiopians as well to introduce this concept in the country. And I am very much optimistic that Ethiopia being having more than 100 billion populations and second largest economy of Africa. Rest of the African countries always see only 2 or 3 African countries and then they have to follow the concept. So I am very much optimistic that having Takaful companies in Nigeria and Ethiopia, the rest of the African countries will also go for this concept. Anyhow, let's come to the model. And after having a very detailed discussion with the insurance professionals of Ethiopia, we recommend that the Wakala model would be the very good for Ethiopia. There's no difference between Wakala and Wakala work model. What is the difference? For example, this is Wakala work model. If you remove the work from here, you remove this work over here. Work is a mechanism that you have to fix some funds for a specific purposes. That is called work. So if you remove that work from here, that is Wakala model, by the way. So in Ethiopia, the Wakala model would be the idea for the window operation and for the careful companies. Let me give you the insight about the both model, the Wakala model and Wakala work model. So you can understand, I can understand right now, I'm communicating with a group of insurance professionals and I'm very much optimistic. I was seeing the participant list from the Facebook and from the Zoom. We have about 70 professionals in the Zoom and we have about 400 people in our Facebook pages and the groups as well. So we have a very good audience today. I'm very much thankful to all the people from Ethiopia and rest of African countries. Let's discuss the Wakala model, that how Wakala model works. For understanding of that model, I have segregated the pool into two colors. The number one, the green color representing the Takaful company pool. That is called SHF, shareholder fund. And this blue color is representing the participant pool, the clients and customer pool. That is called PTF, participants Takaful fund. I have segregated these two fonts into two different colors. The green color is representing shareholder funds, and the blue color is representing for the participant Takaful fund. So let me explain you. Here is the participants, and participants have, here is the participant. For example, in Ethiopia, you have in a company, you have 50,000 clients, for example. That is the participant pool. When participants have to give the contribution, for example, the total size of that contribution is the 100 million. From the 100 million, the Takaful company take the Wakala fee. Wakala fee, the Takaful company have to take the Wakala fee to perform certain tasks. Basically, they have to manage the pool of participants. They have to manage the claims. Claim have to be paid by the PTF fund, but the Takaful company have to manage. The Takaful company have to manage operation. The Takaful company have to manage investment. The Takaful company have to manage the re-Takaful treaties and etc. To arranging all those tasks, the Takaful company have to take a Wakala fee, the agency commission, which is about from 30% to 45%, dependent on the size of the pool. So when the Takaful company take the Wakala fee, from the Wakala fee, they have to bear all their administrative expenses, all their employees or human resource expenses, all their management expenses, And whatever is the remaining after deducting all those expenses, whatever is the remaining at the end, that is whatever is profit or loss, that is the profit and loss of the shareholder of the Takaful company. But from the PTF fund, whatever is the remaining in this pool after deducting the wakala fee from the Takaful operator or from the Takaful company, all the claims have been made from there, all the operating costs will be made from there, all the reserve will be made from there, and whatever is the remaining at the end, that is the surplus, which again distribute to the participant on pro rata basis. So that is the mechanism. Let me explain you. I already explained that in your country, you will do not have a waqf. You can remove waqf from here. This is a without waqf, wakala model. So what's happened? For example, this pool is a size is 100 million bear. For example, that pool is size 100 million bear. The participant gives the contribution. Might be you have 20,000 clients in this pool. From 100 million, for example, the 35% goes to the Takaful company as a wakala fee. It means 35 million goes to the company over here. 35 million come as a wakala fee over here. And what is the remaining? The remaining is 65 million, which come over here. Okay, the total pool 100 million. The Takaful company took 35% wakala fee, which is the 35 million. And remaining 65 million goes to, as a, you can say, the remaining PTF fund to participant pool. Let's discuss PTF fund first. So 65 million will be invested by the Takaful company from the SHF. Might be the investment from that profit is 5 million. And from that 5 million might be 30% profit from the investment income, because at that time the shareholder SHF acting as a mudarib and PTF acting as a investor. In Islam, we have a one partnership agreement which is called mudarba, whereas one party contribute to the capital and other party contribute to the services. Whatever is the profit, that profit distributed between the mudare and capital provider. So here the company will be the mudare and the pool of participants will be the capital provider. They have to invest. Might be the investment income is 5 million. From the 5 million, 40 million, for example, goes to the 40% goes to the as an investment income to the SHF. It's mean 2 million goes to the SHF and 3 million will come back to PTF. So total size of the PTF become 38 million. From 38 million, all the operating costs will be deducted. Might be the operating cost, operational cost is 18 million. After deducting operation cost, what is the remaining? 50 million. From the 50 million, might be 10 million is the re-takaful cost. It means remaining is the 40 million. From the 40 million, might be claims are 45 millions. It means that is the -5. Might be the re-takaful claims are 8 million. It means there is the positive 8 million. So from the 8 million that the Takaful company might be have reserved. So from after deducting the claim, what is the scenario? Here is the 8 million. I'm just giving you the example that how that pool works. After deducting the claims, after deducting the reserve, for example, reserves are the 3 millions, remaining is 5 million. That 5 million is the surplus. That 5 million will be distributed again to the participant on pro rata basis. That is the surplus in the pool. There was total pool size was 100 million. The Takaful company took the Wakala fees 35 million, remaining 65 million. They have to invest it 65 million in interest-free banking. They took the 3 million profit. From 3 million profit, it becomes 65 million. 18 million was the operational cost, remaining 50 million. 10 million was the re-Takaful cost, remaining was the 40 million. My 45 million was the claims, remaining minus 5 million. And they took about 13 million from the Takaful benefit, remaining 8 million. From 8 million, they took 5 million as a 3 million as a reserve. What is remaining over here? 5 million, and that 5 million is the surplus, which will again distribute to the participant on pro rata basis. So this is the treatment of PTF pool. And let's come to the SHF. The Takaful company, they took the 35 million as a Wakala fee. They took 2 million, that 2 million as the investment income. And even when they invested, it become 37 million, might be they invested 30 million from there. And they took 5 million profit from the investment as well. So it means it will become, after all the investment income, it will become here 42 million. So from 42 million, the Takaful company have to bear the administrative expenses. That was the 42 million. Might be administrative expenses was the 10 million. Remaining 32 million, they have to take human resource expenses, might be that is the 15 million. So it's mean when they deduct 25 million over there, it become 17 million. From the 17 million, the management expenses will be deducted. Might be the management expenses are 15 million. What is the remaining? Remaining is the 2 million. That 2 million is the profit for the shareholder of the company. That is the profit for the shareholder of the company. So you see that in the Takaful mechanism, basically the Takaful company have to operate two pools. Number one, the shareholder fund, which belong to the Takaful company, and then PTF fund. And whatever is remaining at the PTF fund, that is the surplus, which again attribute to the participants. And in the whatever is remaining at the SHF, at the shareholder fund, that is the profit and loss of the Takaful company. 3 weeks before, I was in Ethiopia to meet a couple of my clients, and I was guiding to them that whenever you will give a minor surplus from here, for example, from here, here might be a 5% surplus or 10% surplus to your participants, then it will be a very good profitable venture for the customer that they will convert from conventional insurance to Islamic because they believe that whatever is the remaining at the end of the year or policy period at the PTF, that again distribute to the participant. And we have an example in different countries. For example, there was a one Takaful company in Sri Lanka, Amana Takaful. Once they distributed 36% surplus to their client. For example, if you give $100 to insure your car, your vehicle, at the end of the year, they give you 36% as a surplus. So sometime the kafir is growing for as a, you can say, being the business venture as well. They believe that insurance companies also regulated by the regulator, and the kafir company also regulated by the regulator. But in the insurance company, there is no surplus distribution. But in the kafir, there is a very good surplus distribution for the participant. And yeah, this is the model. I went to a bit detail in a technical aspects because you are the insurance professionals. You can understand it very, very well. By having this model, why this is the model? Why we are taking this model? Because we wanted to eliminate the full and Islamic element from the operations of the insurance. And by having that model, there is no interest in the insurance mechanism. There is no gharar, uncertainty. There is no, we can say, the kimar, and then there is no risk transfer mechanism. So the purpose of the this model to eliminate an Islamic element from the operations of the insurance company. So this is the Wakala work model, which is the very famous model. If we see the global Takaful company, about more than 85% Takaful company, they are based either Wakala or Wakala work model. Mudarba model is very rare now, because what is the Mudarba model? In Mudarba model, let me explain you very briefly, because in Mudarba model, as I mentioned, there are the three major models: Wakala based work model, pure Mudarba model, and Wakala model. Wakala based work model and Wakala model is similar. If you make that PTF pool, the participant fund, as a work, that is called Wakala work model. If you do not make it as a work, that is the Wakala model. So these are the both similar model. But the Mudarba model is a different. Let me explain that what is the Mudarba model. In the Mudarba model, basically, the Takaful company do not take any Wakala fee. From here, they do not take any Wakala fee, basically. No Wakala fee. No Wakala fee. They operate in a similar way, and whatever is remaining over here, whatever is the remaining at the end of the year, that is distributed between SHF and PTF. For example, here was the 100 million. From 100 million, there's no Wakala fee. That is invested. Might be they have 20 million profit. So it become 120 million. From 120 million, re-takaful cost will be deducted, operational cost will be deducted, claim will be deducted. Might be at the end, the surplus is the 40 million. From the surplus, 80 million goes to the shareholder, SHF, 20% distributed to the participant. From the 80%, whatever is the remaining over here, from that 80%, the company have to bear the admin expenses, human resource expenses, and the management expenses. And whatever is the remaining, our deducting these costs, that is the profit for the company. So, but one is the major question, that this, if that pool is in the loss, if this pool in the loss, then how are the Takaful company take any profit? How they have to manage their administrative expenses, employee expenses, and management expenses, and etc. Therefore, people do not prefer, that the Takaful company do not prefer to the Mudarba model. And in Wakala model, the Takaful companies basically take a upfront fee. They have to take the upfront fee. And by having the upfront Wakala fee, they have to manage all the expenses. Otherwise, in the Mudarba model, they have to wait for the next year to manage those expenses. So that is the difference between the Wakala model, Wakala Waqf model, and the Mudarba model. So let's come back to the slides again. Here I just explain you that how the Takaful basically works. Let's consult with the slides now from where we left. So whatever we discussed, here we can understand that what is the difference between the conventional insurance and the Takaful. The major difference I already mentioned to you that in the Takaful is the similar to the insurance, but without any such element which is not recognized by Islam. Those un-Islamic elements was riba, gharar, kimar, and risk transfer issue. So operationally, we can segregate that what are the difference between them. We can segregate the Takaful with conventional insurance. Number one, on the basis of the organizational principle. The organizational principle for the conventional insurance company is the profit for the shareholder, while the organizational principle for the Takaful is the mutual benefit for the participants. Number two, the organizational principle of the conventional insurance company is based on the risk transfer. When the client gives the premium to the insurance company, they have to transfer the risk. While in the Takaful, there is not a risk transfer mechanism, that is the risk sharing. Because from where you have to pay the claim? From the PTF. From the PTF, it means all the risk of the clients are being the share. For example, here is the person A who give $100. You are the person B, you give $200. Another person C who give $500. For example, person C have a claim of $600. How the Takaful company have to pay the claim? He will take some amount from other clients, other customer. 500 was from the person C. They will take 50 beer or $50 from B, $50 from person A, make it 600 and give to person C. It's mean the risk is not transferred to the company because company is not giving the claim from SHF. Company is giving the claim from PTF. So it's mean the risk of the clients are being shared within the pool, within the PTF pool. So Takaful is a mechanism for the risk sharing, while the conventional is the mechanism after risk transfer. So that is the another major difference. The third difference is the value proposition. That what is the value proposition? The value proposition of the conventional insurance company is the profit maximization, while the value proposition of a Takaful company is affordability and the spiritual satisfaction. Because if a Takaful company take higher premium, what happen? Then it will go to the surplus and again distribute to the participant. Therefore, the Takaful company sometimes they have affordable prices. They knows if they will take a higher premium, it will go to the surplus and again distribute it. So that is another difference. Another difference by law, the conventional insurance company, they have to follow the government regulation, the regulation which is made by NBE. Why the Takaful company, they have to follow the regulation by the NBE for the insurance, and they have to plus the follow the Sharia regulations as well, which have been designed by NB as well in the directive. So in the Takaful company, they have to follow conventional regulations and the Sharia regulations as well. That is another difference. In a conventional insurance company, ownership belong to the shareholder of the company, while in the Takaful, the PTF pool basically the participant, they are the owner of that pool, that fund. Therefore, sometimes we say the ownership belong to the participant, and Takaful company usually called TO, Takaful operator, and manage the conventional insurance company is managed by the company management, while the conventional insurance the Kafur company managed by the operator. The conventional insurance company, they have to follow the contract of sale, while the Takaful company follow the contract of non-sale. In conventional insurance company, another difference for the investment. Investment is based on interest based or non-interest based investment mechanism, while in a takaful it is necessary that all the investment should be made in Sharia compliant mode. The surplus of a takaful company is distributed again to the participants, while the surplus of the conventional insurance company is the profit for the company. So we can see that these are the differences between the conventional insurance and the careful. So these are the differences that how the careful companies are being worked. As I mentioned that the first Takaful company was made in 1979 in Sudan, and after that there are some Takaful companies in Bahrain, in Middle East, in Dubai, and then Malaysia. So the first experience of the Takaful emerged from the African market, but in the poor penetration of in Muslim countries, and I was in Ethiopia, I was seeing that insurance penetration in Ethiopia is about 0.29 or 28%. And I am very much optimistic that after having a Tata Kaful, the insurance penetration will increase by two folds. Number one, in Ethiopia, you already have 11 window operation for interest-free bank. And according to our careful estimate and my limited research in Ethiopian market, they have about 5 million depositor clients, and they from last year, from 1.5 year, they increased at the rate of 137% rate. So the interest-free banking is increasing. It's mean who will facilitate to interest-free banking? The Takaful. It's mean that the Takaful company have an immediate market more than 5 million. Number two, the last month there was a big news from Ethiopian market that first full-fledged interest-free bank, the Zamzam Bank, have been started their operation, and the couple of four, even 4 or 5 banks are in the queue of interest-free bank. It means you have a captive market. Number one. Number two, this is a solution for all. The Muslim who are not utilizing insurance due to the religious reasons, they will come to this concept. That is the second major market. And this is a very good product when you have to give surplus to life. All the people will be full. Insurance understanding will be increased. When insurance understanding will be increased, then definitely, definitely the insurance penetration will be increase as well. So these are the very good statistic for the Ethiopian market, and it would be a very good tool for the financial inclusion and the insurance inclusion as well. So these are the global map of the Takaful companies where the Takaful companies are working. You can see there is a couple of Takaful companies in New York, in America, then in Russia, then in USA, in South Africa. Then you can see that the Takaful companies are even are in Nigeria, the Senegal, Morocco, South Africa, Sudan, even no Ethiopia, in Kenya, in Middle East, in UK, in many other markets. So insurance industry is increasing day by day. I already mentioned if we include the window operations and the full-fledged Takaful company, the industry size is about 500 right now. In 60 countries, the Takaful companies are working. And similarly, we can segregate Takaful with the general Takaful and family Takaful. In in general takaful, they have all those type of products which are necessary in the market, and similarly in the family takaful, they also again are all type of family insurance product. In general takaful, they have a property takaful, they have a marine takaful, they have a motor takaful, they have a miscellaneous takaful, and etc. And similarly, in the family takaful, they have term life takaful, whole life takaful, endowment takaful, universal takaful, marriage plan, educational plan, and etc. What are the target market for the Ethiopia? The people who do not insure due to the religious reasons. Yes, very good target market. Number two, people who insure and are insensitive to the religious reasons. Yes, you will find a lot of people who already have a conventional insurance but when they will find the alternative, they will convert from conventional to takaful. Then the people who currently do not insure at all, as you know, the insurance penetration in Ethiopia is less than 1% of their total GDP. So the insurance, that the kaful would be a value added product in the insurance market of Ethiopia, and which will increase the insurance inclusion. By the way, you can utilize the kaful concept with the technology. Technology will play a vital role for the development of the kaful industry, and you can utilize technology with any takaful product, because future of insurance or takaful is limited now with the insure tech or takaful tech, the takaful technology. And by having that technology, the price of the product will very ideal and remain limited. And by having the takaful, in takaful we have a product called micro takaful. Micro takaful is a very good product for the poverty alleviation and the social development. And similarly, in takaful you have a bank takaful product. And when a takaful company will link their takaful product with interest-free banks who already have thousands of branches, then you can sell your product to your target customers, or either Muslims or non-Muslim, in a very perfect way. So in the kafur, we have some uniqueness that the kafur is very good to be integrated with the technology. Number one, Takaful is very good to design the banker Takaful product with interest-free banking. Number two, number three, Takaful is a very good product to design the macro Takaful product for the poverty alleviation, for the social development, for the agriculture development and as well as for the livestock development. And I am very much optimistic that by having such a unique and new insurance product in the Ethiopian market, you will see a very good change in the dynamic of the Ethiopian insurance industry. So anyhow, these are some Takaful target markets. I already explained that model. Let me escape these slides. What are the fundamental for the sound development of the CAFU? Number one, the leaker framework. You congratulate to the Ethiopian insurance industry that they have an ideal insurance directive. And I am very much honest. I'm not saying this that Mr. Bilal is in this meeting, but I'm very much honest that that directive is the ideal directive in any African market. You can see what is the idealness that when an insurance company want to start the Takaful window operation, they do not need any extra capital or better capital. Go to the TIRA, Tanzania Insurance Regulatory Authority. See the regulations of NICOM, Nigerian regulator, IRA in Kenya. They have a paid-up requirement and very strict regulatory requirement. But I would like to congratulate I would like to congratulate the NBE and the Insurance Association of Ethiopian that they did a very good work to design a wonderful regulatory framework for the Takaful. Number two, Sharia governance structure, which will become in the Ethiopian market very soon. Institutional capacity enhancement, yes, that is going very well. Such type of webinar, some training. But I would like to recommend to the regulator as well that they have in their regulation, they have to include certain hours, 8 hours, 14 hours, or 20 hours for the insurance professional. They have to learn for the Takaful when they want to serve in the Takaful industry, so that they can understand what is the Takaful, because those are the people who will sell Takaful into the market. So if regulator have a such requirement for 10 hours training or 8 hours training, either in-house training, whatever, but after having, this is a humble recommendation by our side, that then they will have a very good human resource and the product which will be increased. As I mentioned that in Takaful, you will have a micro, banca, co-Takaful, re-Takaful, and many other things. And talent development in Ethiopian market, what I observe, this is my recommendation to my Ethiopian brothers and sisters as well, that in your market, you have two extreme for Takaful or insurance. The number one extreme, you have a very good insurance professional. I'm living in Dubai. I met a lot of people in UAE who are from Ethiopia but serving in the insurance industry. They have a very good knowledge of the insurance. That is the first extreme, that you have a very good insurance professional. The second extreme, you have a very good Sharia scholars who knows Sharia very well, very well. I met with couple of them. But what is the issue? That Sharia scholars do not know what is insurance. An insurance professional doesn't know what is the Sharia. You have both things in your country, but they have a gap. You need to bridge the gap. The insurance professional, they should learn what is the Sharia, and the Sharia scholar should learn what is insurance. When you bridge the gap, then you will introduce a quality human resource for the Takaful industry. And I am very much optimistic the Insurer Association of Ethiopia and the regulator will launch such program for the talent development of Ethiopian insurance industry for Takaful. This is some the regulatory structure for the enabling environment for the development of the Takaful industry. We will share that slide with the regulator as well, so that how to ensure the Sharia compliance in all aspects of the Takaful business at the governance level, at the potential level, at the reporting and marketing conduct and market production level. Challenges and opportunities, I already explained you a lot of uh, opportunities: financial inclusion, insurance inclusion, new market, new types of business, and etc. Let's discuss the challenges. When we discuss the challenges, then we will find the way forward. One challenge might be faced, and I am very much optimistic, and I requested with the interest-free banks as well, that that they have a limited investment avenue in interest-free banking for the very good profitability. For the conventional insurance company, they can invest everywhere. They can get a very good profitability. But in Ethiopia, the interest-free banking industry should design some investment products for the Takaful industry, because right now in Takaful, in Ethiopia, one company already took the window lessons, and couple of companies are waiting for the approval. So in the future, it will be a very good business for the interest-free banking and finance as well, by having the investment products. Then the lack of uniformity model in African countries, because in Africa, that is challenge for Africa, challenges for Africa, not for Ethiopia. That there are the different models in different regions, capacity constraint, limited investment avenue, and Sharia expertise. So these are the challenges, and I am optimistic these challenges will be the strengths for the Ethiopian market very soon, because you are very vigilant nation, and I always feel proud whenever I will be am in Ethiopian market. When we talk about Takaful uh, companies, basically there are three types of Takaful companies. Uh, Number one, the full-fledged Takaful company who only operate the Takaful business. Like in your country, you have a full-fledged interest-free bank right now, Zamzam Bank. Then the window operation. The conventional insurance company, they have a window operation for Takaful. And in the window operation, they have two categories. Might be they open they have 20 branches. Among 20 branches, they have a window operation in all 20 branches, or 10 branches, or 5 branches. That is the management decision. Or they can have some stand-alone branches in window operation as well. Might be they have a 20 branches. From 20 branches, 18 branches are dealing to conventional insurance, 2 branches are dealing to the Takaful. So that is called stand-alone Takaful operation in window category. And sometimes the insurance company have a combination of window and standalone branches by having the window license. So I would recommend that the Takaful company who will start via insurance company as a window, they can open their Islamic or Takaful operation in their existing conventional branches, or they can have dedicated branches for Takaful as well. Those are called standalone Takaful branches. So what is the opportunities for the Ethiopian market? The financial inclusion, insurance inclusion, I already discussed. Huge Muslim consumer, solution for all, not only for Muslim. By the way, Takaful is not a interest-free insurance. That is a Takaful. And Takaful word is acceptable for all. So this is the solution for all. Then the government regulator and multi-lateral organizational support, I am appreciated to your regulator. They are doing a very good job. to regulating interest-free banking and the Takaful industry in the country. And the many multilateral organizations are very much optimistic for such type of product in Ethiopian market. Those organizations, they are not working for the religions, they are working for the financial inclusion. And the result of the product, and what is the result of the product? Either product is Islamic or conventional. And I already gave you one lesson that whenever you have to introduce the Takaful product in the country, you have to introduce that product solution for all. You have to introduce the Takaful as a insurance product, not a religious product. Do not make the mistake. The Takaful is the insurance product, not a religious product. If you will introduce the Takaful as an insurance product, it will be solution for all. Yes, it will be the extra advantage to the Ethiopian Muslim market that it is according to their religious belief. But for others, they have advantage as well, that that is a very good system for insurance, very good business venture for insurance, because they have to take surplus at the end of the year, whatever is the remaining. Sometimes I give you the example of South African and Nigerian market. Might be this will be a lesson for you, that either you will introduce the Takaful as a religious product or insurance product. In Nigeria, they have more than 200 million population, and they among them more than 50% are Muslim, which is more than the total size of Ethiopian population. Ethiopian population is about 109 million around. But unfortunately, 7-8 years back, when they introduced Islamic financial concept, they introduced as a religious product. And unfortunately, in Nigeria, most of the consumer, more than 70 to 80% consumer, are only Muslim. Why? Because in Nigeria, interest-free banking or Takaful introduced as a religious product. I was in Nigeria, I saw some brochures of banking, they put the picture of mosque, picture of Kaaba, and etc. So what is the message for others? But this is only Muslim product. They did the mistake. But when you compare Nigeria with South Africa, in South Africa, the Muslim population is less than 2%. In less than 2%, but when they introduced the Takaful or interest-free banking product, they introduced as a banking and insurance product. Therefore, why do South Africa, where Muslim population is less than 2%, more than 98% are non-Muslim brothers and sisters, but they have 9 Islamic banks. About their 70% of their clients are non-Muslims. Why? Because they introduced as an insurance product, as a banking product, not a religious product. So in Ethiopia, this is a blessing that you people are living without any religious discrimination. So you have to introduce the Takaful product as an insurance product, not a religious product. Yes, this is a product which is designed according to the Islamic teaching. And therefore, Muslims have a extra advantage, extra leverage that is according to their religious belief. But equally, that is a very good insurance product for non-Muslims. So this is my humble recommendation that insurance should be introduced. Because why I am focusing on this point, you are at the initial stage. Whatever you will do right now, that will be make the history. Other people will follow to you. If you will be the right direction from now, the industry will be at the right path. So anyhow, the opportunity solution for our government support, multilateral organization support, regional standing, and micro Takaful are a good tool of poverty alleviation, etc. By the way, the regional standing of Ethiopia is very good. And if you have a very sound development of the Kafun industry, then other regional country will follow to you as well. So these are some opportunities. And in the last, AlHuda, Center for Islamic Banking and Economics, have a dedicated department with consultancy wing. And by having that department, we provide advisory and consulting services to design the window operation for the Takaful company. We have established more than 20 window operation in different countries, including some full-fledged Takaful companies. And then we have a research and product development, training and capacity building, publication and awareness. We provide free awareness services for the Takaful. And even anybody from you, they need any literature, any book, any presentation, any concept, any guidance related to the Takaful, they can contact us. We do not charge any fee to provide the literature, to provide the books, to provide the information related to the, you can say the presentation and etc. So they can contact us. So we are with you in Ethiopian market. I would like to introduce my colleague, Mr. Abu Bakr, who is our local country representative in Ethiopia. Then Ms. Tanzila Javed, she is the regional head for East Africa. She is based in Kenya and Ethiopia. So these two people are always available to serve the local market. And meanwhile, I'm always available if you need any assistance, any guidance, and etc. And so these are our global map where we are working. We have been working in more than 50 countries for the Takaful. So this is the brief detail about the Takaful. And I am very much happy to have a very good audience from the insurance company of Ethiopia and West African countries in this webinar. This is the awareness webinar to just clarify you at some concept that what is the Takaful, because Takaful is a very difficult things. And to operate the Takaful is a difficult thing. No, window operation is very easy. That how a window operation works. For example, I'm in the insurance company. I'm the insurance company, and I have a different department. I have a IT department. I have a claim department. I have a reinsurance department. I have a account and finance department, etc., admin department, etc. So what we have to do to design the window operation? In those departments, we made a one department that is called the Takaful department. And we integrate that Takaful department with other department to initiate the Takaful product. And this department works in such way that their all funds are segregated from the conventional insurance so that they can map out their profitability, their performance, and etc. And let me share my the essence of my 15 years experience for the Takaful industry, that the profitability of the Takaful operations for the Takaful or insurance company are much better than to insurance. Why? Because the profitability is dependent always on the claims. From where you have to pay the claim? The claim have been made by the PTF. So if you have a huge claim, it will not affect to your profitability, by the way. Number two, the claim settlement is very good in the Takaful. Why? Because the Takaful company do not pay claim as such a, they have to pay claim from PTF. And I'm sure by after having the Takaful, the claim settlement in the Ethiopian market would be very good. If the claim settlement would be very good, then what would be the effect? That more and more people will come to the insurance inclusion. Thank you very much. Thank you for listening with patience. Let's I have some questions. I have a couple of questions in the my chat box. Let me briefly answer those questions to you, and then I will I will request to the Insurance Association of Ethiopia and the director of the Insurance of NBA, Mr. Bilai, to conclude the session. Let me take briefly 2 or 3 questions from the chat group. Okay. The lecture slide will be emailed to all the participants, and we will share, upload that presentation in our Facebook website page as well. Let me share you the name of my Facebook page so that you can take those slides from those from the our page. Our page name is Center of AlHuda, Center for Islamic Banking and Economics. You are requested to like our page in Facebook and LinkedIn, Islamic Banking and Economics. We will upload this presentation over there. You can find over there. This lecture is uploaded over there as well. So if you want to see that lecture again, so you can visit our Facebook page, AlHuda, Center of Islamic Banking and Economics. Let me white face. Yes, you can, you will download your presentations, this presentation from your facebook.com oblique AlHuda site. Okay, there is a one question from, 1 minute. The piece, there's a question from Abraham M. What is your understanding of peace of mind as far as the Takaful insurance is concerned? Uh, Basically, insurance give you a confidence. Insurance give you a peace of mind. I'm the traveler, for example, I'm the traveler. I have been to more than 71 countries. I have my travel Takaful with me. It gives me the peace of mind to me. I can travel everywhere. When my flight will cancel, my insurance company will pay. This is a peace of mind. If my baggage is lost or broken, my insurance company have to pay. That is a peace of mind. So similarly, the kafir is a peace of mind for the Muslims as well, that this product is according to their religious belief. This is without interest, because in Islam we have a strict prohibition of interest. Then there is a one question from the Ajit Datta. One question: in case of higher claim, net payout or more PTF. Yes, that is a very good question. Basically, if there is the higher claim, for example, that if the claims are higher, and over here, for example, over here there is the minus. The claims were higher. For example, the claim was 100 million, pool size was the 60 million. It's mean the minus 40 million was deficit. So the first thing they have to take Takaful from, for example, Takaful benefit was the 20 million, remaining is the 20 million was the deficit. They have to take from the reserves. The Takaful company have the future having claims. For example, the reserve was from last 3 years, the reserve was 15 million. So it's mean that that pool is minus for 5 million. That pool is minus for 5 million. So that is the minus. So in this case, when that pool is minus, for that mechanism, that is good, very good calculated by the NPE as well. In this case, basically, the shareholder of the company will give the interest-free loan, that is called Kalse to this pool. They will give 5 million to this pool and make it equalize, I mean, make it zero. So in this case, there will be no surplus to the participant. But for next month, this pool is positive for 8 million. For example, this pool is positive for 8 million. The next month, this pool is positive for 8 million. From 8 million, the 5 million will return back to the shareholder because that was the loan. And then the remaining was 3 million. So remaining 3 million, that 3 million will distribute to the participant, the 3 million only. And 5 million go to the as a loan to the shareholder. So this is the mechanism that if there is the heavy claim, then how the insurance company have to settle, the Takaful company have to settle that heavy claims. I think so your question is answered. There is a one question from Muhammad Noor. He's saying that, is it possible to work both Takaful and conventional insurance simultaneously? Yes, brother. The window operation is the name where the conventional insurance company and Takaful company works together. But in the when we have designed the window operation is designed in a such way that the product is totally different. The accounting mechanism is different. They have to utilize Takaful instead of reinsurance. They have to invest in Sharia compliant mode. So their funds puttings are basically are different to the conventional operation. So yes, they can work together. Basically, there are two international bodies who are controlling the Takaful business or who are designing the regulation for the Takaful. One is called AOFI. AOFI means Accounting and Auditing Organization for Islamic Financial Institutions. They have designed a very good standard for banking and finance. And then they have IFSP, which is based in Malaysia. They have designed a very good standard for prudential regulation for the Takaful. And inshallah ta'ala, in the first quarter of this year, we are planning to have a very good exposure tour for the industry exports for the international market. From we will bring the people professional from Malaysia and bring them to international markets. Brother, by having the limitation of time, I will take one more question. And let me share my WhatsApp number with you. You are requesting that you can share your question with me directly. Then I will respond to you through a call or through voice notes or WhatsApp or through text. Here is my WhatsApp number. You can contact me anytime, whatever information you require related to the Takaful. So this is my WhatsApp and by having such a wonderful interaction and discussion, let me conclude my presentation over here. And now I request to Brother Hadush Intase to kindly join us, and he's from the Insurer Association of Ethiopia, and he's the General Secretary of the Insurer Association of Ethiopia. I request him to join us and have some words with the participants. Brother, you can unmute yourself, please. Brother, you can unmute yourself. Adush, Brother Adush, the General Secretary of Insurers Association of Ethiopia. Yes, please, brother.
Yes, thank you very much, Mr. Zubair. Thank you, AlHuda. I'm very much impressed by the presentation, and it was very enlightening. This is a new product to our market. The insurance industry is criticized for not having reached a very big part of our population, not having identified and responded with right products. And now, with the commitment of the regulator, we are happy to have this new product, Takaful, to be useful to the significant segment of our population, the Muslim community, and in fact to all other portion of the population who are interested in the product. I'm very much impressed that South Africa, with 2%, only 2% of a Muslim community having such developed Islamic financial products, and with us, the substantial population of Muslim community, to have failed to respond as early, but it's good that that we started it today, and hopefully, as you mentioned, this will be developing to be an important part of the insurance industry. I'm hopeful that this will extend the outreach of the insurance industry, and the penetration rates of the insurance industry will improve very soon because of this new product and the other undeveloped products like microinsurance, which the insurance industry have to do much in the coming years. So thank you very much. This is a new product. We have good insurance people, as you have mentioned, but this is as a new product. We have also to learn the technical as well as the managerial aspects of Takaful. So your training at this good moment is very important. I'm sure we'll also have similar trainings in the periods to come. The Association of Ethiopian Insurers is willing to partner with AlHuda to support in their capacity development efforts. We'll be cooperating with you in facilitating, in organizing these forums. And well, for the time being, rather thank you very much. Hopefully our participants will also joining me in thanking Mr. Zubair as well as AlHuda. Thank you very much.
Thank you very much, sir, for your such a wonderful words. And we are always available for the Insurance Association for the development of the industry, inshallah ta'ala. So at the end, no, I request to His Excellency Brother Bilai to have a final words and conclude our today webinar. Please, you have to unmute yourself, brother.
Okay, thank you, Mr. Zubair. In fact, it is a very detailed. You went as far as suggesting some of the products which, in your view, are preferable to be implemented by the insurance industry. So the presentation has covered. Sorry, can you hear me?
Yes, sir. We are hearing you. We are hearing you.
Okay.
Yeah.
So I don't want to take much time on this. We are happy. I think our colleagues and people from the Ethiopian insurance industry are well informed about the products, about the difference between the two streams of products. And the presentation for me is an uplifting, inspiring, which motivates our people to take up this opportunity and expand their range of products that they offer to the market. Thank you for the very nice words and comments. In fact, our reward would be the growth of the sector, the inclusion of the people who are not so far been included in the financial services, and above all, getting more and more companies to introduce Takaful, including micro Takaful. So our effort will continue, and it would have not been successful in quotation mark without the support and cooperation of AlHuda and other partners. So for that, I will also like to thank Mr. Zubair, Ms. Tanzila for your support, and we'll continue working hand in hand in the future. So this is what I want to say, and thank you, and we'll continue working together in the future. And we hope finally.
Thank you very much. So,
and finally,
please, sir.
And finally, we hope and pray to get a good result from the US election.
Definitely. Yes, because that US election sometimes play a vital role for the development of different financial sectors. And I'm also very much statement of Mr. Trump last week about the issue between the Ethiopia and Egypt. And I believe that Ethiopia will be successful in their aims to have a cost-effective hydropower for the nation, inshallah. So thank you very much, and I am very much appreciated to all the participants. I'm thankful to Brother Miswan from Dashan Bank. I am thankful to the people from the Avash Insurance, Grouper Insurance, Romeo Insurance, and many EIC and many other insurance companies who joined us today at Zoom and who joined us through our Facebook and YouTube channels. And I'm again thankful to Mr. His Excellency Mr. Bilai, and as well as to the General Secretary and the Chairman of the Insurance Association of Ethiopia. And I am thankful to my colleague Ms. Tanzila and Mr. Abu Bakr as well for their contribution, for having such a wonderful discussion with the insurance professionals. And inshallah, in the future, we will continue to organize such type of free trainings and webinar for the development of the Takaful industry in Ethiopia. And next year, we are also planning to have a global Takaful forum in Ethiopia. Hopefully, when that pandemic issue will be sorted out, then we will organize, because we already organized 2 international conferences for interest-free banking. But this time, we are willing that next year we organize a global conference for Takaful. We plan to bring at least 20 international experts of Takaful in Ethiopian market in this conference. And we will share the detail of that conference with you time to time as well. And thank you very much and very good evening in Ethiopia. And whatever you question you have, I share my WhatsApp number. You can contact me anytime. Very good afternoon. Jazakallah. Thank you.
Thank you.
Assalamu alaikum.